Take the mortgage payment, add the property taxes, add the insurance. A lot of times people compare all those three with a rent price, but it's wrong because when you have a mortgage, a part of it is going towards principal, which is actually your money. So the real way to see if it makes sense buying or renting is to take the mortgage part, remove the principal. So then you have interest, which you're paying money, it's never coming back to you. You have your property taxes, it's not coming back to you. And you have your insurance, it's not coming back to you. If you can find that same house for rent less than those three amounts combined, then mathematically it makes sense to rent.
The gentleman's spot on. If you want to look at it from a financial perspective, you really need to look at the interest you're paying on a purchase and your taxes and homeowner's insurance. And then also you need to add another category, and that's maintenance. The principal that's paid down is kind of like a forced savings account. So that part I liked. The part I didn't like is he was comparing a snapshot, and a snapshot is just that. It's a picture, it's a moment in time, and that moment in time that he's trying to capture is today. Today, is it cheaper to buy or is it cheaper to rent? What's the better outcome or alternative for you? The problem with a picture is a picture doesn't always tell the whole story. A movie does a much better job because a movie shows the interaction and the movement over time. So in this situation, buying versus renting, we want to look at both today, but also projections of tomorrow in the future. This is where I get into a rent versus own comparison for buyers with their very specific information. So we're looking at their actual rent rate, the actual home prices that they're looking at, actual mortgage costs that they're looking at, and we're comparing those because there's something he's forgetting. Rent rates go up. Let me say that one again. Rent rates go up. So you have to factor in increased rent rates over time, comparing that to the static cost of a mortgage, because mortgage payments don't go up over time. Well, I mean, your taxes can increase a little bit, your homeowner's insurance can increase a little bit, but the principal and interest payments, those don't change at all. And when you compare the over time cost of renting versus owning, the typical break even that I see somewhere between year 1 and year 3. When I tell people they're looking to buy, is I'm like this: listen, you're gonna make a sacrifice. Your payment is gonna be higher for the first year or the first 3 years. Those are the ranges that I see most often. But then after that, buying actually becomes a better financial decision than renting. I did one for an individual, and over a 5-year period, it was $130,000 extra in equity and value and savings over the increased rent by buying versus renting. So again, I like the snapshot. The snapshot is just today. And if all you're looking at is today and you're gonna move in a year, definitely I would say rent. But if you're gonna try to settle in for a few years, I highly encourage you to do a rent versus own comparison and evaluate all the benefits of buying and all the negatives of buying against all the benefits of renting and all the negatives of renting. That way you can do a completely informed decision and make the best financial choice.